So when looking at tankers, there's two sides of the equation. It's the supply side and the demand side, of course. And I think you have said in earning calls and in your presentation that the good thing here is that it's mainly a supply story, or at least we have that for a fact that the supply side look good. Can you sort of break down the narrative surrounding tankers and why you believe maybe it's just a bit boring story, but boring in a good way ahead?
I wouldn't say it's boring, but I would say that the demand side is the most difficult part to analyze. Oil demand historically, for the last few decades grow about 1.5% per year. So it's exceptions are financial crisis, COVID, you had sort of some disruptions. But so demand side is not, going crazy like you had in other shipping sectors from time to time. But what is happening now is that people have had over the last few years, or several years, I would say, less confidence in the tanker sector for a variety of reasons, which I can allude to. And that has held back investments. And because it's been underinvested in a way, especially for VLCCs that we operate for the last few years, then the order book for new ships is very benign. And the ship is very fast becoming very old. So this is why my statement now on my recent call was that the story for our equity now is, increasingly becoming a very robust supply story. But it's not a disregard for the demand side. So what really changes in demand is that you can imagine that we transport supply of oil, not necessarily demand. So in a phase where oil inventories are being built up by the refiners, that means that we transport more than what's being consumed, and that is good for our business. In the reverse of that, when they are drawing on inventories, we transport less than is consumed, and that is normally not so good for tankers. And these sort of dynamics, they amplify the swings, if you like, or the cyclicality of the business. So you need to keep a close eye on demand, and China has become the biggest importer of oil. And as we've seen now the last few years after COVID, China has not really gotten out of the blocks yet, in their recovery. And this has been a bit of a sort of muted market in a way. But despite that, the last 2.5 years or so, I would say we made, average pretty much $50,000 a day, which is well above historical average. So it's not been a weak market, but it's been less fantastic or less good to some of the other sectors. So we're not disappointed in itself, but maybe a little bit annoyed that the smaller ships made more money than our big ships. So it is becoming increasingly a very, I think, very attractive supply story, and it's a bit difficult to destroy it because the big yards that build large tankers, they are very active in building a lot of ships, container ships, large container ships, LNG carriers, petroleum, LPG carriers, on other types of equipment. So if you go to a shipyard today, it will take quite a long time to get new supply delivered. And at the same time, the ships in the water today are getting very quickly older. So I think this is, creating a very interesting opportunity. And I experience also increasingly that our customers are becoming aligned with this view. Of course, they have a little bit of a different agenda because they're going to pay for the freight, so they want the freight to be, lower than maybe what a ship owner wants, which is, normal in business. But they are, I think, a bit concerned about the fleet now is going to shrink at a time when oil demand is still growing. And this is a dynamic that we find quite exciting. So,
very interesting. So looking at, if ask a question of how tight is the order book really, just adding on, of course, few investments, but the older vessels, because of sanctions and shadow fleet, seems to maybe, be very strong, and it doesn't seem like we're going to have a lot of recycling anytime soon. Is that sort of like adjusting a bit the supply story, that these older vessels stay out there longer because of the geopolitical stuff and everything going around there?
So there's many sort of pieces to this puzzle. So if we look at sort of the basics first, which is just looking at the age profile of the fleet in itself. So by end of next year, i.e. end of 26, some 20% of the fleet will be older than 20 years of age. And, 450 ships almost, which is close to 50% of the fleet, will be older than 15. So that in itself paints, a very, interesting scenario that the ships are fast becoming older. You can argue maybe ships will trade longer than what they have done historically. But, oil companies and terminals and whatnot in general are quite strict when it comes to approving vessels and using vessels. So it's not sort of so easy to take, the older spectrum of the fleet into the regular business. Now, in this context, a meaningful portion of this old fleet is in what people refer to as the shadow fleet. And part of the shadow fleet is now sanctioned by OFAC, Office of Foreign Control in the United States. So it's making it very difficult for these ships to operate and doing conventional business. They are in a way serving a purpose because they transport oil for people that can use these ships, but they can rarely load directly at terminals and also in particular rarely discharge at terminals because the ships are in such condition and under such a history that people cannot touch them. So there's a lot of offshore transshipment of oil. So ships meet and go alongside each other in international waters, and they transship oil from one ship to another and do that maybe once or twice. And then they change the identity of the oil along the way. So we'll get to that later. But this means now we estimate roughly 140 VLCCs being sort of in that part of the fleet, but this is included in the older fleet, so we should be aware not to double count. But of course, then we have said many times now that this fleet is shrinking fast. And to your question about demolition and scrapping, this shadow trade, has paid phenomenal freight rates because oil that was sanctioned had to be sold at a discount for a buyer to accept it. And then they had to pay a significant premium to owners of old ships for them to freight sanctioned oil. So some of these ships have made, tons of money in transporting some of this oil. And that, of course, have held people back from scrapping ships because it's been, financially very rewarding to keep the ships in the business. We sense now that things are tightening, and the new guy in the White House is, following up on what Biden started in his last innings, and it's becoming even more tighter. So it will just make it more difficult to use all this equipment. So this will, put more pressure on the supply side and make it more difficult for people to find alternatives than to go to, good ship owners like, a DHT type of company. So.